All right, what's up, everybody? Another USDA report out today. So we are going to go ahead and just jump right in. Here is a weekly December corn chart. What stands out really on the USDA report, U.S. ending stocks came in a little bit lower. They reduced at about 150 million bushels here from May into June. And then you have world stocks that were reduced down a little bit as well. You know, what stands out to us, they lowered the Brazilian corn crop estimate, which makes sense. We've been hearing about drought out there. And then we see a little bit of a lower number coming here of carry-in from last year into this year, which lowered the upcoming crop year's ending stocks. So all that being said here this morning, you still have resistance sitting up at 640. I mean, this report was bullish corn, but we just aren't quite pushing past that level. Recent highs in here at 640 quite yet. I think a lot of it still has to do with weather and the crop condition ratings that came out. So again, we have a little bit more support in here on the corn side of things with this USDA report, but the market just doesn't seem like it's quite ready to make any moves. Keep in mind too that we do have that June acres report coming out here in a few short weeks, and that's you know, other than weather, I think what's really going to be the driver behind the next move in price. So the blue line again just represents 640. That's kind of resistance in here. If we have a severe weather market or we see acres drop, some sort of production reduction, anything like that, where stocks get tighter, you know, that's where we can see this move to $8. Below that, we've already tested $5 here recently. Again, that seems to be good support. But if you add a bunch of acres in and start to bring this ending stocks number up, that's where, you know, price could certainly head as well. So bulls and bears are still kind of positioning a little bit here. Nobody really quite has the upper hand. 640 continues to hold for now. Going over to the bean side, this is a weekly November bean chart in here. As far as the USDA report goes, they raised the ending stocks in here a little bit from May, as well as world stocks. This is obviously bearish. As far as the report goes, we have to keep in mind that South America has a good crop. They're covering the export market. Front month beans, July, are way down today. There's a lot of bear spreading going on in the bean market right now, and a lot of that has to do with the fact that just the risk is coming off of old crop. South America is there to meet the demand. Everything's going over to new crop at this point. So again, the other thing to keep in mind here, we've had some rain relief in the Dakotas, and we'll show you some weather maps here in a little bit, but you know, beans really made this latest push in conjunction with that spring wheat rally and the dryness in the Dakotas. And so, you know, again, 1480 is kind of resistance in here. Without that spring wheat market running up, I'm not sure that beans are going to push up again much higher unless we get that severe drought type situation across a majority of the growing region in here. Here's the wheat numbers as far as the USDA goes. They lowered U.S. ending stocks a little bit. The problem, of course, though, is that the U.S. hasn't been the world's leader in wheat for a while. And as you can see, world ending stocks came up. This leads to a relatively flat report. We're showing the September spring wheat contract. Reason being, that's been pretty hot and volatile. It's a little bit higher as I come in here to record, but again, you have that resistance line up in the $8, $8.25 range. And with the recent rains, again, we're not discounting that they're having production issues, but again, the market's kind of playing in on the weather, and with the recent rains in here, that's giving some relief to the drought. Again, as we flip over now to the drought monitor, and here you can see from week to week, with last week being on the right, this week's, you know, today's monitor on the left, some of that dryness has been reduced in the North Dakota region. Okay, that's causing some of this weakness in the bean market and the spring wheat market. However, you'll notice on today's report, you see a bigger area of coverage, you know, in Iowa and Nebraska. This is kind of mixed. I think it led to corn going up a little bit here this morning and is also offering corn a little bit of support in here. But the problem is you start to see, this is the observed precip over the last 7 days. Obviously, it's showing, okay, some relief in the Dakotas, but that pocket here in the center, not receiving any rain. The problem with that recent drought monitor is here's your QPF forecast. If this verifies, you start to see some rain relief in those areas that have had recently expanding dryness. So again, I just don't know that the market wants to make a big move here until more is known about the acres or if rain and precip is going to continue to be pulled out of this forecast. That's kind of a wait and see. So that being said, here to wrap up quick, our final thoughts. Not much for us has changed in here overall as we've gone throughout the season. You guys need to look at your dollars per acre, the revenue that's available out there, and your price level protection. So again, we like budgeting dollars for puts, especially on the bean side, anywhere from $13, $14 puts. Budget some dollars for the option premium and get those in place. Again, our goal here is to protect for the big washout move. It's hard to kind of outguess every 10 or 20 cents in the bean market, but the next dollar or two is what's going to be important. So, these puts give you control over your bushels and keep you from getting washed out in a downside move. If the market runs up, you're on board if you have those bushels. On the corn side, we like the puts. You're going to spend a little more. You can always sell a call up at 7. You can even sell some $8 calls for 20 cents to pick up some premium. Again, this has some margin risk with it in selling that call, but you can set up a pretty wide trading range in here as we go through as we wrap up kind of the last few months of weather. So keep that in mind as you look at these prices. Again, our fear is more to the downside than the market's going up. And then again, look out to 22 crop prices are pretty good. You've got Dees corn 22 sitting around 520, Nova beans are around 13, and I believe mid spring wheat was around 7 here recently. So those are good numbers again to look to start to build an average. That's the emphasis here. You have to start to build the average, and those are what we believe are good starting points. So if you have any questions, give us a call, shoot us an email. It's right there on the screen. We'll also have it down in the description below, admin@prime-ag.net. Please subscribe to our channel, and we thank you for tuning in.